Hello, Investing Putts back with you again. Wanted to give you an update on how my price slope prediction method's been working for during this kind of eventful week. So to give you a quick background on the method, here's an example with XLE, the energy sector ETF. So say that I take 20 days of past price data. I make a straight line fit to those 20 days of past price data, and I plot the resulting curve in red. I then hope that today's price slope will predict tomorrow's price. So when the slope is positive, all it's saying is that on balance, the price has been moving up over the last 20 days. You would then assume that the trend will continue until it doesn't. You'd have to have pretty bad luck for 20 days of past upward price trend to always reverse on day 21. So anyways, this is just simple trend following. No rocket science here. There's the method all laid bare. Okay, there's nothing magic about 20 days. You could just as easily use 10, 20, or 50 days in the prediction window. However, I do some back testing to hopefully tune into an optimal window. Though I really need to understand better how the window length affects the performance of the method. I don't have a clear handle on that yet. I'll go quickly through the securities that I'm trading. Here's TLT, the U.S. Treasury Bond ETF. Yellow is the daily price data for about 14 months. Blue is the backtest curve if you trade the price slope method. So when the blue curve is flat, it means that the method keeps you out of the market. So here we're actually basically flat when we trade the method, but during those times when we're not in the market, we could be more productively allocated elsewhere. So here's a plot of the TLT price slope, again over 14 months. The window length was 20 days for the prediction. So when the price slope is greater than 0, which is the pink line, that means we're in the market. When the price slope is less than 0, we're out of the market. So as you can see here, I'm not currently in TLT, though the curve is trending up, so I may be if there's a few more good days for TLT. So I'm going to go through the other securities. I'm not going to explain the graphs again. Here's GDX, gold miners. I'm currently in GDX, and it's one of the few things doing well right now. Here's FXI, Chinese large cap stocks. It's an interesting method. It's been a horrible 14 months for FXI, but the price slope method does keep you out of trouble, and we got about a 10% return if you would have traded that over the last 14 months. I'm not currently in FXI. Notice the really short 7-day window, prediction window. I don't like to be that short, but that's what the backtesting told me, so I'm trading it right now. EEM is emerging markets. Again, a stock that's done pretty poorly over the last year. The price slope method kind of keeps you flat, so it keeps you in the game, keeps you out of from the big drawdowns, hopefully. We're currently out of the market. USO, crude oil, it's arguably been the best commodity, or really one of the very best tradable ETFs, commonly tradable ETFs, up about 70% over the last year. The backtest method basically captures the upside. It does stay out of the market for a few periods, which is kind of interesting. Currently we're in the market for USO, and we have been for the last 50 days or so, which makes sense. It's really been the best asset class out of all of them during this weird time. XLB, bulk materials, it's done pretty well this year. The back testing seems to keep you out of some drawdowns. We're currently out of the market on XLB. I was in the market briefly a few days ago, but I'm out again. XLC, communication services, it did great for the first 9 months of the period, but ever since then it's been getting beat up badly. This is where all the meme stocks and snowflakes are. So you can see we're out of the market for the most part by trading the price slope method. And currently, we're out of the market, very much out of the market with XLC. XLE looks pretty similar curve to USO, crude oil. And we are in in the market for XLE and have been for some time. XLF financials have done pretty well this year. Though it's interesting to catch that you see that we're out of the market for much of that period. So it's kind of cool. You capture most of the upside without being in the market all that much. And presumably that cash is getting returns elsewhere. We're currently out of the market with XLF. XLI Industrials, pretty similar to XLF. We almost got in the market for XLI, but now we're definitely out. The curve is on its way down, no end in sight. XLK Technology, even though it's called technology, it hasn't had as tough of a last 6 months as the XLC. And I was in the market briefly a couple days ago. It was trying to rally, as you remember, it was trying to rally, but it did not stick, and now it's down again. So we're safely out of the market for the time being. XLP Consumer Staples was a good year for consumer staples, but we're out of the market right now. Real estate was one where interesting curve. Just an incredible first 6 months of the year for XLRE, but then it started to waver a bit, and the method kind of kept us out of the market. And we've been out of the market for the last 40 days with XLRE, and it's kind of trending down with no end in sight. So that's good. Here we are, definitely below the pink line, so out of the market with XLRE. Utilities, XLU, we're in and out of the market. Right now we're out. I would think XLU would be a kind of a defensive stock, but apparently not. XLV Healthcare, it's had a pretty sideways last 3 or 4 months. We've been out of the market most of the time, which is good. We were actually in the market, just like XLK, we were in the market briefly a few days ago, and now we're out. XLY Consumer Discretionary, it's kind of acting like XLC. These are the kind of unprofitable common interest stocks, meme stocks you might call them. So it's been a rough last 3 months, and we're currently out of the market. Okay, so that was an earful. Now for the performance. I've only been trading this for 9 days, so bear with me. It's not nearly long enough to know whether a method works, but I made the video because it's been a rough week for stocks, and I don't think the rough patch is over by a stretch. So anyway, the red curve is a virtual SPY portfolio. Specifically, that's 31.5 shares of SPY. The blue curve is my price slope portfolio. So I'm down a little bit, but I'm mainly flat, and then now I'm pretty much beating the SPY pretty handily. So the question is, what am I in? Here's a daily plot of my holdings. I mean, this plot is far too complicated to go over in detail, but it does kind of shows you the cash position, which is black, and it kind of shows you how you go in and out of things. There's not a lot of in and out with this method. That tends to be longer holding time, which I like. So you can tell that as stocks have crashed over the last week, basically right now I'm out of everything except for 3 stocks. I'm out of everything except for XLE, Energy Sector ETF, USO, Crude Oil, and GDX, gold miners. And that's good because these are the only things that are doing well right now. But to be fair, even these, if we have a real crash, if we suddenly have a 10% drawdown one day, it's not it's going to happen too fast for this method to pick up on it. It'll pick up on it for the next day. But if we have a true panic, even gold commodities, those could also go down as well. So of course I am 80% cash, and that would be good in a panic. But one thing I have not done is to kind of dynamically adjust the positions so that, say, I'm 70% invested in something at all times. It's a little bit, I'm just getting the feel for how to trade this, and I probably will adjust allocations when I get comfortable. I don't want to be adjusting allocations, like spending a half hour every day adjusting the allocations. So I will change it, but I'm not sure when or how. So do you have any suggestions on how I should handle position sizing in general or with this method? I'd love to hear them. Anyway, I hope you found that interesting. And got comments or questions or criticisms, leave them in the comments. I'll see you next time.